All right. Can somebody verify that we're on now?
You're live now.
You tell me I have to do it again?
All right, guys. Take two. Rolling speed.
And
Down. Action.
welcome back, everybody, to another Thursday live streams. My name is Roy Jr. I am the co-founder and CEO of Chart Addicts, the #1 educational service in the world for traders. We're bringing you guys the best market analysis. I'm trading Nasdaq 100, top 100 tech stocks in the U.S. economy. I'll also be covering Forex pairs as well as fundamentals and news. If you have any questions, please put them in the chat. Keep it cordial, and let's get ready to make some money. And if you guys are on this YouTube, please make sure to hit the like and subscribe button real quick so the algo go ahead and lobs this out to everybody so they can also make some money with us. Without any further ado, let's go to the charts. Let me show you guys what I'm looking at. Nasdaq 100, we're pre-market open, about 5 minutes from market open. Price had this very aggressive bullish push, and then we've started to wedge a little bit higher. I'm expecting one more push up to the 12,050 region so we can continue the shorting pressure. Guys, not going to lie, they've started to take out $100 billion. And by they, I mean the Federal Reserve has already started quantitative tightening, which is the process of taking money out of the economy. They're doing so in quantities of $100 billion a month. They started this last month, and it's finally starting to work its way into the economy. And so we're seeing it hit a lot of these companies hard. Layoffs are getting a lot more prevalent, and GDP has printed negative consistently. So with that being said, I feel like we're heading into a recession, and I'm expecting further downside on the stock market. I'm expecting further downside on the cryptos. And so this bear market is not done. There is one more leg to this bearish pressure, and everybody should be prepared for that. Now, as day traders, we can take advantage of the markets on the short side, take those profits and reinvest them into long duration assets. That's personally my strategy, and I think that if anybody has the ability, you should be doing the same. It's not financial advice. Please consult a financial professional. Nasdaq 100, quick retracement down to 830 at the market open, push up to 1250, and then we can get a nice short. US30. So US30 is broken above these previous highs, just barely. We'll see how it reacts at the market open. If there's a giant wick that comes up and then closes under these candles, then this is actually going to be a pretty good shorting opportunity to the downside. However, as we've been consistently printing higher lows and higher highs, higher low, higher low, higher low, and higher low, this thing has not indicated it's going to turn around yet. And so we'll most likely continue up to the next key level. 31,400 is like the first key level. This is where the consolidation starts. Then towards the high of the zone is 31,600. This whole area here is ripe for potential sells. The reason that I think we're going to get a clear continuation up is whenever we see clear candles like this with no interruption in between, so all solid red candles, we'll most likely get no traffic on the way back up. And so once we get back up to the top of this range around the 31,500, 31,600 region, we could be looking for shorts on US30. Until then, I would trade the momentum and continue to look for longs after the market open. And in case you guys weren't on YouTube before, and I kind of started the stream a little bit late, Boris Johnson resigned, Prime Minister of the UK. Half of his cabinet resigned, and probably like 50 or so of his prime ministers resigned. So like half the government resigned. Health minister just resigned, and the chancellor of the country resigned. So a lot of resignations going on in England. Not really sure what's happening, but I'll show you guys what I'm seeing on GBPs in a second. That's going to be my main focus aside from trading Nasdaq, which is finding kind of like a swing opportunity for GJ or any of the GBPs, honestly. So no surprise, gold's been absolutely crashing. Why is gold crashing? You can take a look at the DXY, which is a composite of the dollar index versus a basket of global currencies. The dollar has been overperforming the basket of currencies. You can see it's already at the 107 area. This is very bad. I know I talk about this a lot, but we don't want a dollar this strong. We want the dollar down here around the 96 to 100 range. That's a healthy trading range for the dollar. It's a healthy range for us to be able to trade with global partners, especially the developing nations. And having a strong dollar just makes it so a lot of these smaller countries can't pay back their debts that we've given out as a nation in dollars, because that interest they have to pay is in dollars. And every day that this thing moves up, the value of what they have to pay back is just more and more expensive, and it's harder to pay back. So we're going to see a lot of defaults on these dollar denominated loans that the US issued. And that's just a function of a strong dollar. The higher this thing goes, the more likely we are to see the Fed start printing. So everybody says it's going to be a prolonged recession. I do believe that we're 12 to 18 months away from the end of the recession. But if the dollar keeps pumping like this, the Fed doesn't have a choice but to start injecting money into the system to bring it down. All that aside, the reason I look at the DXY is because that's how people make decisions on gold. The gold and the dollar are inversely correlated, so they're correlated opposite of each other. And right now, as you can see, all assets, regardless of what they are all crashing. So I have this saying, and I want you guys to be familiar with this saying, especially if you're on these streams. It's FTM, follow the money. We notice that gold is crashing. We notice that Bitcoin is crashing. We notice that stocks are crashing. But what's going up? The DXY. So it means that all the money, everyone is selling off these high-risk assets, and they're all liquidating into cash. Now, why would the smartest investors in the world be going into cash? It doesn't make a lot of sense. Well, it's because they foresee a recession, and if you have cash in a recession, you're king. And that's basically what the market's telling us. So I think gold's going to continue to crash throughout this recession as the dollar keeps pumping. Until the Fed starts printing money, I don't really see gold shooting back to new highs. It might normalize. It might come down to the, like 1700 area and normalize, or a little bit deeper and normalize. But until we see some money printing, we're not going to break these 2000 highs. In terms of day trading, personally, I would just wait for a pullback at 1760 and look to short. Stop loss above previous highs. And take profit back at these previous lows. So what we're seeing is consistent downside pressure, retracements, consistent downside pressure, retracement. I want to see this thing pull back up to a deep retracement at 78, and then a crash back down to 1733. The R&R on that trade, if you put your stops above the previous high, would be about 2 to 1 if you took your profits at the previous low, and then maybe more if you continue to hold it past the previous low to the extensions. If anyone sees something different on gold, Joseph, if you're on here, see something different on gold, just let me know. You said 56 ministers resigned. Yeah, it went up to 59 yesterday, but I mean, the details don't really matter. The fact that a bunch of ministers are resigning the same time that Boris Johnson resigned, guys, keep in mind, Boris Johnson took that office out of force. You think it's because Europe's deciding to go to war? All right, my bad, y'all. He said you ain't live on YouTube. Okay. So, I mean, it's pretty straightforward what we have going on. My biggest focus this month is the Fed meeting on July 28th. This is where we see if they're going to keep getting more aggressive this year. I know we say that every Fed meeting that they raise rates. At this point, we know they're going to raise rates. The question is by how much? Jerome Powell, his big catchphrase right now is 75 basis point hikes will not be common. Okay. If the inflation print keeps coming out high, he's not going to have a choice but to print. He's not going to have a choice but to continue tightening the economy, which is going to send us into a recession. So at the end of the day, recession risk is almost 90% at this point. All right, let's get back to business. It's 9:30 market open. We're seeing the first kind of movements at the market open. Here's that pre-session consolidation. Yeah, we might actually be able to get the sell at the open of the session here.
Ryan, if you're in here, that's a great buy from last night.
Yeah, them GJ buys are slapping.
Oh, good stuff.
Yeah.
You can, I mean, I've been just, trading it from the high time frame, scale down, look for re-entries all the way up this entire path. So that's all I've been doing. I just re-entered actually like 20 minutes ago.
Same thing here, bro.
One more bottom. That'd be a great entry. A double bottom at 162.3 would be a clear entry up. If it closes below 162.3, plays down here, then this thing is going to continue to the downside. But yeah, this is pretty clear here. Daily zone, massive rejection, still creating higher lows. Maybe this is what the GBPs needed. They just needed a little bit of news to help fuel this whole engine. Yeah, I could see GJ really pushing from here. I wonder if we can get one more retest down here. I'm going to put a buy limit at 162.3 for a double bottom here. Or I'll just come back and enter manually. So add alert. 162.35. Don't send me that email. Oh, I'm signed into my other account. Okay. All right. Well, I'm going to stay focused on the prize here, which is Nasdaq.
Is anybody in the buy from the push?
Not from London consolidation. I'm in buys from 11/8/30 though.
Ooh.
Whoa, I just totally looked in that. She is pushing, huh?
Yes, sir. We're heading up to that next zone at 12,050 level.
You still got those runners from the 40s?
Nope. I closed everything, but I am still holding a short from 12,067. That was like a runner that I had from a while ago. I'm looking to resell at that same price as soon as it pushes up here.
My boy been holding that trade since the 28th of June. Love it.
Actually, I could see it right here. It has the date that the trade was open. Yeah, literally the 28th.
off that double top kind of that that rejection back under that zone. Yeah, I think that's where you took it.
Yeah, it hit the liquidity zone, came back, 61 retest.
Yeah.
Come on.
Yeah. I was being too ambitious. I was waiting for the that deeper second leg, but never came.
Like the push up here?
Yeah, not even up there. Like maybe like not the 61, maybe like even to where those candle bodies were, right at that top of that doji, something like that. I was like, let's see if I get a little deeper. But hey, I took my notes.
We'll take what we can get. That's why I'm not really big on predicting as much as I am on reacting. So I don't really know which way it was going to break at the market open, if it was going to come down to retest first before it popped off, or if it was going to break through. But I know that this is the zone I'm looking to short from. I'm expecting a detour here. So it's like it'll come up, consolidate, one more push up, and then break down. I think we can get another similar type pattern that we saw on the left, but on the smaller timeframes here. So I don't know if you guys have been seeing what's happening in the crypto markets, but there's a lot of companies, especially these exchanges, that were offering staking benefits that are starting to go under. So if anyone has any crypto staked, or if you guys are in, if you have your money in a custodial wallet with any of these third-party exchanges or third-party wallet companies, I would think about securing your money. I would think about taking your money off of the exchanges and putting them on a hard wallet just for your own security. So this is just for educational purposes. I don't usually trade this pattern, but we have the consolidation at the pre-market open. We had a double bottom here and then a push up. What you can actually see is a retest. So if I measure this move, a retest to come back like a little bit inside the range to test the 60 and 70%. And that's actually a decent opportunity for re-entries. I see this all the time before it's going to hit the daily key level and short. So if that happens, that's one of the opportunities for a re-entry.
Literally took that same exact trade literally before New York closed yesterday.
The consolidation break?
Yeah, it's easy. It's easy. Like it was consolidation, then retest of 11,830 yesterday. Same thing. 61.8 the T. But the main thing is, guys, Roy's basically just trading structure. It's not like, oh, whip out the fibs. You know what I'm saying? So
it's a little of both. I mean, I have my fib setups on the higher time frame. I know this is my 88.6. So I could keep them up, but just for kind of like keeping the chart clean, that's why I took them off. But essentially, this is what I'm watching. All right. So the whole thing about trading is, like I said, not predicting, reacting. Price might break through the zone. That's always a potential, but most likely we're going to get a rejection there. Whether it's the full rejection all the way to the downside, or whether it's just from the 88.6 down to the next fib level, or like the skip a fib level down to the 70, even that's still going to be a pretty good move. It's about a 1-to-1 risk and reward, not not ideal. If it hits the 61.8, that's where you get your 2-to-1 risk and reward. So overall, that's the trade. And then we look left. If I extend this zone to the left, look at where we are. Previous selling zone. Previous resistance, previous resistance, previous resistance. Resistance. Potential resistance again. All right. That's what I'm watching. It's pretty straightforward. We got to be patient while the market gets to our entry. And that's the game. So I don't know who was on the who was in the chat when Mario and I were talking about the break and run strategy. So Mario was explaining how this is something that you see with the aggression of a trend where the market's making a consistent trend, consistent trend, consistent trend. Then all of a sudden you make a quick 90% lift off from the trend. What that means is you're probably going to push up to hit a key level, but then on the way back down, you don't usually stop at the trend line. This is usually where the trend line gets broken and you get the break and run strategy all the way back to the lows. So that's kind of what I'm expecting here. We're getting an aggressive break off of that trend. I do want to see it hit a key level and then push back, break the trend line, and continue pushing back down. So while it heads up the target, we're hanging out. If you guys have any questions about structure or about certain pairs or anything, just put them in the chat. This would be the perfect time to go through them because I think we're going to see another 20 or 30 minutes of waiting here. Where's your stop loss on NAS? Above the previous high. So I'd say about 170. Now that's an incredible amount of pips, which is why I don't advise people just enter off the zone and then put a 170-point stop loss. All right. That is not what I'm advising, and that's not what I'm doing. What I want to do is I want the market to push up into this range and then close back above, or sorry, close back below. Once we do that, then we can actually reduce our stop loss to be just above the manipulation wick or the stop hunt, whatever you guys want to call it. So I want to see a push up to the zone. I want to see it consolidate. I want to see a liquidity grab and closure below. We're going to enter sells. We're going to put our stops right above the liquidity grab, and then we're going to milk this thing to the downside. Deal? Sounds like a good deal to me. I don't know. Sounds pretty straightforward. So there's been a lot of people asking questions about the Enigma app and about the FX Summit recording. So if you're a Chart Addicts member and you're interested in the recordings, hang tight. They're on the way. What we have to do is give manual access. So we're just going through one by one and giving access to the emails. If you guys want access as a Chart Addicts member for free, make sure to go to the FX Summit site and just create a login. It's free to create a login on the top, but create a login just so your email is there. And then we can just give you the access to your email. That'll make everybody's life easier. So Chart Addicts members, FX Summit 2022, create the login account, and then you guys can get access. Same with anybody who's watching this on YouTube that actually was at the event. The Enigma app. We're literally 2 inches away from the finish line on this thing. We're waiting for one piece of code from one person in this one little small place, and then we're gonna be officially ready for launch. So I don't want to make any promises about it being done by Friday or anything, but by the end of this week, we should be 100% done with the Enigma app, and everybody can onboard on there and get free access. We're giving everybody a free month of Enigma signals. You'll get to trade with myself and the rest of the Chart Addicts team, as they call some of the best signals in the game. Of course, our performance results speak for themselves. We keep track of all of our performance history. So don't take it from me. Go check out the results for yourself, and you guys will You guys won't be disappointed. So we'll let everybody know when the Enigma app fully launches, get everybody a free month, and then we'll get started on the best month of your trading life. This is the patience, y'all. This is the patience. When I'm here trading by myself on most days, I'll kind of just, I'll play some light music, really nothing too distracting. And then it's literally the same thing that we're doing now on this call. This is how I trade by myself. I'm just watching. And then there's going to be an opportunity. If I miss the opportunity, if I hesitate and don't take it, I have to wait another X amount of hours or whatever it is for the next opportunity to present itself. So that's the way the strategy is. As long as you guys are pinpointing the trades you want to take, you're only taking quality trades. You're not doing like trading is waiting for an entry patiently. Gambling is buying as this candle is forming, just to be in a trade. So there's some folks that are like really at the very beginning of their trading. They're still sort of in that phase where they're just taking random trades. Then there's other folks that are strategically waiting for a specific entry because of a predetermined set of standards that you put up as your trading plan. So you guys got to ask yourself, are you gambling or are you trading? And yeah, everybody better be on the trading side. Trading is not sexy, right? And we make it look sexy on social media. Everybody makes it look sexy, the supercars, the whatever it is. Really, y'all, trading is patience. Trading is learning not to get impatient with an entry, learning not to close an entry too soon just because it hasn't moved enough, closing a trade just after a few pips of profit just because you came off a losing streak, you don't want to lose it. Trading is really making those smart decisions every single trade. All right. So trading, like being a great trader is not a destination like a lot of you might think. God, if I can just get this down, I'll be a successful trader. Being a successful trader is an act, right? It's a verb. You have to make good decisions on a regular basis. Those good decisions add up. You check your account at the end of the month. Wow, I didn't fucking blow my account. I didn't overtrade. I didn't over leverage. I followed my plan. Okay, I'm not a fucking millionaire, but damn, this is my first profitable month. So becoming obsessed with the process that's going to make you successful, that's what makes you successful in trading. Figured I'd let you guys know. I know a lot of people are confused. They're like, wait, I thought the purpose of trading was to get rich. It gets there, y'all, but you really do have to put in the work towards the craft. This dope hat. You guys know I got the Chart Addicts drip. So very important thing that I think I can do on these streams for all of you is walk you through my mindset while I'm watching the charts and what goes through my mind as it hits specific levels, just to kind of let you know, because some people might be panicking at the extension level. Okay, well, Roy, it bounced up and it hit the extension level. What if it doesn't make it up here? Should we just start scaling in for shorts now? For me, as long as these levels are getting respected on the way to my final target, to me, it's nothing but encouraging. It's encouraging because it shows me that the Fibonacci levels are valid. They're still being respected. The market is still following this sequence, which means that there's no reason it won't follow the sequence once we get to the -61 extension. So we just had a slowdown at the -27 extension. Everything is still valid, still playing itself through. One more push up. Potentially, like, I love to see this during New York session. I want to see a consolidation where a bunch of retail money gets trapped. I want to see a fake up that scares everybody out of the trade. And then I want to see a closure back below. That is my double. That's my combo. My combo is They shook out all the retail traders first. I watched it happen, and then I get to jump in right after because of my ability to be patient and wait for the right entry. So that's what we're doing now. GJ is still pushing. It's about 20 pips from where we last spoke about it. This is something I've been meaning to show you guys. So we had a huge sell-off from the oil prices, and this was a lot of it was due to the OPEC meeting that happened. So you notice that we have this previous low sitting right there at the daily support. We managed to close below it, showing that there's selling interest in this market. So we're either going to reject off of this zone here, or we're going to make a deeper pullback and reject. So the good news is that we are seeing a little bit of a drop in oil prices. However, America made a decision to take basically enough oil for us to bring the gas prices down and just give it to China for some necessity. I think it was strategic. I think that the reason that we gave the money to China was so that they don't have to go to Russia for oil. But we just dug into our strategic reserves and gave one of our biggest adversaries our oil, which we could have used to bring prices down, which is why we're seeing that little spike up. But hopefully gas prices should start reflecting as the price per barrel starts to come down. All right, it's almost 10 a.m. As we enter this blue zone, this is where I'll be looking to start stacking shorts. And so if you guys are new and don't understand how I stack my positions, let's say I was going to risk $120 total on a trade. Okay, for the chance of making $240, $250, or $300. What I would do is I would put a 0.01 here. I would put a 0.01 here, and then I would accept a 60-point stop loss on those. So I can split up my position. So if I did enter, let's say at 1240, and then price retraces a little bit higher to 1270, what I can do is enter a better position at 1270. Then when the market drops, if I want to close the positions, I'll close my worst one, the one that's lower, and I'll keep my highest position open. Let that thing just milk, or let them both run. So scaling into positions gives you an advantage because sometimes we enter the full position and then it starts going into drawdown and we start second guessing the trade. We may close some of the position, et cetera, et cetera. Scaling into the position allows you some flexibility because as the market retraces against you a little bit, you can get a better entry if you still believe in the trade. So that's what I look to do at these zones. I have not entered a single position. Still waiting for this thing to break through the zone and then close back under. I need to see that sellers have enough interest in this area still to drag the price down. Once I get a confirmation from the market that sellers have stepped in, I too will step in. Yeah, I didn't really see any buying opportunities this morning. Like we had this consolidation, but normally what the market will do if it wants to buy up at the market open is we'll have a push to the downside first to either test the previous low or create a higher low, and then we get a push up. This is usually what happens every single morning. Today, we just kind of had strict move and then a massive push up off the range. This is even more confirmation to me that there's something fishy going on and that we're most likely going to hit this range and then reverse. This kind of shows that it's trying to entice everybody into going in longs. But look at where you're entering. If you guys are new to trading, you guys have to understand the very, very basics of how prices move. That institutions, they're looking to liquidate up here. They're looking to sell here. Okay, let me put this in regular language. Like an institution or a market maker will sell here. And then as the market drops, they'll start to take out some of their position. And then at the lows of a specific range, that's where they'll take out the entire position. They'll close the trade. Retail traders, they're entering sells down here because as the market's been dropping, continue to drop, they're looking to, okay, well, I've missed so many sells. Let me just get in at this point. And then that's where the market makers are looking to jump out of their trades and potentially invite buyers to get into the market. Same thing on this side. The institutions who sold right here, they're most likely looking to sell at this range as well. The retail trader is seeing the aggressive buying momentum and is looking to continue to buy because they believe that the trend is going to continue in their favor. It could, don't get me wrong, these candles down here, these aggressive red candles could have broken through, but they did not. And most likely, whenever you get to a bottom of a range, they will not. So now that we're back at that top of the range, I'm looking for the market to break through. Give me a rejection so we can start to take short positions. And I'll be honest, scaling in now might not be a bad idea.
Could get a pretty deep retracement with this 1 hour candle closure.
Oof. Yeah, I'll be honest. This thing is so far from entry. Damn. That would have been a good place to start scaling. But I believe we can get one more push up. So just like we talked about at first, potential retest, one more push up, and then we get the real breakdown. Damn. Perfect rejection off the zone. That was the 22. That would have been about, sheesh, probably 50 points. Quick 500 pips. Oh, isn't trading fun? Who here, this is like just kind of for my own curiosity, who here was told when they first started trading that if you learn how to trade, you would become a walking ATM and you could print money anytime? Who's been told that since they started trading? Or who's had that belief? It says, what broker are you using to trade NAS 100? Currently, I'm using NVFX. NVFX. Here, I'll put the name in here. So that's the official link in the YouTube in case anyone wants to check out that broker. I'm not making a direct recommendation of this broker. This is the broker I use, and they've been treating me well so far. And I can give another broker recommendation if anyone wants it. To the CA members, it's in the chat. It's called Envy. I like it because I actually know the individual who's operating it, and I can vouch for it. So the purpose of trading should be to create other streams of income to make your life and trading easier. Ivan, you've been paying attention, my man. Said I heard that at one point. I did ask part of the walking ATM and IML, biggest scam ever. The whole walking ATM thing is, if there's no setup that fits your strategy, you don't have a trade. And that's the secret of the markets. Most people say, if I get good at trading, then I can get onto the charts at any time and make money. So what they do is, as soon as they get 1, 2, or 3 weeks of winning streaks, they start to feel like they have it figured out. That's when they go in there and try to game the system. You cannot game the system. You have to respect the charts. If there's no opportunity here, if it does not fit your criteria, you cannot take the trade. It's that simple. And so that's kind of the reality of trading, is that as sexy as we make it look, and guys, it's really hard to make trading look sexy, but as sexy as we make it look, it really is a lot of personal development. It's a lot of how many of you can sit in the room by yourself with no distractions, with nothing, and be able to consistently make good decisions on the charts. Who can build that muscle? And so whoever is willing to go through that journey to develop themselves, to be able to sit in a room by themselves, to be able to write down a plan and write down a strategy and to follow the things that you write down, especially when no one's watching, whoever's willing to go through that journey will become a successful trader. And everybody here is capable of that, but it is a choice. At the very end of the day, nobody can force you to journal your trades. No one can force you to write down a step-by-step plan. No one can force you to write down your risk management strategy. Nobody can force you to do this stuff. But the things that make you successful in trading are very straightforward. You cannot cheat the system. You cannot disrespect what the markets are. You can't disrespect Nasdaq, for example. I realized, when I tried to trade US30, what the biggest barrier to my success was, I didn't respect US30. All right. It moved very volatile. The first 2 times I traded it, I made a bunch of money. I had no respect for it. And so I went in there and tried to abuse the market. I showed up unprepared. I showed up distracted. I showed up with too small of an account size. Right. I was unprepared. I respect the charts now. I respect Nasdaq. I respect that the volatility could make me rich, but I also respect that a negligence in my responsibilities can significantly hurt me on this, trading this pair. So develop a certain level of respect for yourself and for the charts and for what you're doing here, and you'll have a lot more success in your trading, because you're not going to be as, you're not going to be as arrogant. You're not going to be like, oh, I figured it out and just enter random trades. You're only going to find the quality positions that you should be getting into. Big piece, y'all. Big piece. We touch on this because it's not that people can't make money trading. Everybody has made money trading. Everyone on this call has made money trading. Keeping it, doing it consistently, not giving it back at the end of the week, that's what makes you a successful trader, a consistent trader. So let me know on YouTube, where are my consistent traders at and where are my gamblers at? Let me know. Where do you set sell limits to enter those Nasdaq trades? Not while I'm live trading. While I'm live trading, I trust my judgment enough to not need to use limits. If I see the market enter that zone, what I do is I scale into my positions and I split up my position size, what I would normally take. I would split it between 2, 3, or 4 different positions so I can get different entries. That's me right now. I'm not saying any clear setups. So then your skill set is being able to stay away from the charts. A lot of people, they cannot grapple with the fact that you spent 2 hours waiting for a specific setup and the market didn't give you anything. In reality, y'all, the market doesn't owe us anything. The market does not care about time. Time is something that we all bring into our expectations when we're trading, but the markets do not care about time. They care about confirmations. Markets care about prices. Markets care about cycles. Markets care about dynamics and sentiment. They do not care that you've been chilling on the charts for 2 hours and you think you deserve a trade. Right? Where do we start if we want to learn? You can go to Chart Addicts. Go to ChartAddictsFX.com. That's our website. Personally, I mean, obviously I can vouch for it because I fucking, I built this thing. But this is our site. If anyone's interested in learning how to trade or developing themselves as a trader, whether you're intermediate, beginner, or advanced, if you're looking to sharpen your skill, if you're looking to learn how to trade from scratch, if you're looking to start from scratch, you've taken too many courses that confused you and you're looking to start from scratch, Chart Addicts is the best place to be. So if you guys are interested, go to ChartAddictsFX.com. We do personal coaching, so you can work one-on-one with a coach. It's very affordable for everybody. It's $99 a month. You get up to 5 sessions a month. You also get to do live trading with us like we're doing now. You also get access to the course material, the 7 p.m. Backtesting calls every day, the backtesting calls on the weekends, all the resources and materials we put out, like the trading plans and lot size calculators and everything in between. So if you guys are watching this and you're interested in becoming a member, it's chartaddictsfx.com. Might be the best decision you've ever made. So far, no retracement of the previous zone, nothing, just a runaway train off of the ledge. One more push into the 12,060s and a closure below. Ladies and gentlemen, she's ours. What is everybody planning on doing after this? I know most of you are working, but what are most of you planning on doing after this? Back testing, then going to the gym, getting my oil changed in my car. Sounds like a productive day, David. Going for a jog and working out. That's what I'm talking about. It's one thing I'm looking forward to getting this cast off is being able to go back and do intense exercise. Cannot negate the effect of like intense exercise, especially as a trader. As a trader, we do deal with a lot of ups and downs in the day, especially with like a lot of mental focus. You need mental clarity. You need mental endurance. You need physical endurance. You need to keep your emotions in check. So physical activity, especially intense physical activity, is very important for traders. So make sure that you guys are implementing that in your day, especially if you want to have the best results. You're an athlete, but your mind is your weapon in this game. And so if you're not taking care of it, doing the right preparations, doing the right recovery, then it's going to be hard for you to consistently make good decisions on the charts. So make sure everyone's taking care of this engine. Renzo says he's about to work out. It helps so much mentally, especially after a losing day. That's when I jog and work out the most. Whatever it takes to keep yourself from getting emotional about the loss and getting too involved about the, about what's happening in the markets. It's a perspective shift. And I always bring this back to a professional athlete. Like, let's say like a quarterback, for example. Sorry, I'm looking for my charger here. Like a professional athlete who throws a pick in a game or who misses a game-winning shot. Yeah, you have the block. But the only thing that stops that athlete from getting a higher contract next year, they're only one touchdown away from everything turning around for them. So, oh, it's on this side. It's right here. No, it's right here. It's right here.
It's for your phone?
No, it's for my laptop. Good looks. But yeah, so a professional athlete, if he throws a pick, for example, he can be down on himself. The coach is looking at you crazy because you're about to lose your spot. The players are looking at you crazy because you just let them down. The fans are looking at you crazy because they had expectations of you. So the quarterback that gets down on themselves is never going to come back from that. They're just going to dig themselves a deeper and deeper hole. The person that gets out there recenters themselves, doesn't allow the negativity to enter their space, doesn't allow the negativity to impact their decision-making. They get to go back out there and give it another try. And really, you're only one touchdown away from switching everything back in your favor. So trading is exactly the same way. You might have a losing day, you might have a losing trade, whatever. Some traders can brush it off and move on. That's the experience that comes with trading. Some traders, they really, really tend to let that loss like linger, you know? You want to allow the loss to linger just enough to where it impacts you. Okay, you don't want to be so nonchalant about losing that you're not learning anything. Okay, sometimes emotion is very powerful. Sometimes being pissed off is powerful because it'll drive you to make change. I'm never doing that again. That only comes from being fed up with seeing something over and over again. So those emotions do play in, but you cannot allow them to linger. The faster you reset, the more likely you are to find the next opportunity to take advantage and make your money back. That is the single biggest difference I've seen between winning traders and losing traders in my life. Ladies and gentlemen, I know of a lot of hyper successful traders, far more successful than myself. I know some traders around the same level as myself. I know some traders that are still picking up their, that are still getting their strategy down, getting an understanding of how they trade and their personality down. I'm letting you guys know there's a very clear difference between winners and losers. Winners do not give up no matter what. Winners are hungry for the win. They're willing to double down and focus, and they don't make excuses. Losers will always find an excuse for why something didn't work out. Right? A reason not to take responsibility. The market did this. UJ did this to me. They did this to me. The victimization mindset versus what did I miss? The trader that's willing to ask, what did I miss? That's the one that succeeds. The trader that asks why. Okay, why is it breaking above the zone? Why did we just have a massive push at the market open? Why are we coming back to retest? Why? The trader that's curious enough to ask those kinds of questions, that's who succeeds. So if that's you, double down. Don't let anybody tell you that curiosity killed the cat or whatever. Curiosity will make you rich in this game. Ask yourself why and take full personal responsibility, even if it's not your fault. Right? If my broker slips my stop loss over the session, and instead of me taking a $1,000 loss, I took a $2,000 loss. Now the broker is the one that initiated the slippage on my account. Do I blame the broker, or do I blame myself for not doing the research on the broker first? Do I blame the broker, or do I blame myself for holding the trade through the session, understanding the risk that my stops could get run? Whoever's willing to take personal responsibility wins in this game. Whoever's going to consistently make excuses, this game only gets harder. And we all have days, people, we're all human, right? There's days where I'm like, man, fuck the markets or whatever it is. But I allow that to last about 15 minutes. And then it's back to reality. The reality is I missed something. I either showed up to the markets unprepared, I rushed it, I was too hesitant, I missed a higher time frame key level, or everything else in between. So price is coming back to retest the resistance level at 12,020. We have the smaller time frame double top that's forming. This could actually be a good opportunity to scale for shorts. The thing is, we already have an impulse. The impulse right now is in the bullish direction. So even though there's a double top here, when we short, it's only going to be a small position. So whoever shorts this, it'll be about 70 points to the downside if it does play out. Versus if we get one push down, another push up, and then we get to do the real sell. up here after the fake out. All right, well, quick short position to the downside just to short the retest. And then if we get a massive pushback up here, we can take another short. So I'm just going to scale a small position, something small enough that I can hold if it decides to, if it decides to go for another run. Stop loss above 1230. Or sorry, 230. 11,230. 12,230. 12,0. Ooh.
Hey, Roy, quick question. What was those numbers you was just saying? I had stepped out and I missed it.
So my entry for this trade is at 11,996. That's where I entered. And my stop loss is at 12,035. So we're taking the scalp position. It looks like this: 12,035. That's the stop loss. Basically, my idea is I took an entry off of this wick rejection that closed below the body. Stop loss is above the wick. And I'm looking to take it back to the session highs from London session. So it's a good 2-to-1 trade. Down to the downside. And then once we come down here, I think we're going to see a breakthrough and a close back above. We can actually take longs down here after the shorts are done. I am in some baby profits on that trade. God, this thing is so blurry. So let's see if we get a follow through or if this thing just wants to push up. All I look at is lows, higher low, and we're still forming a higher low right now. So, really to make me confident that we're going to end up all the way down here, we just have to break this previous low. Got to break this low. As soon as we break that low, down here is pretty straightforward. If we can't break this low, I'm going to close. Like if we keep forming higher lows, I'm going to close because then this thing is going to want to push up. So on this 5-minute time frame, we need this thing to break the body. And on the 15, we need this previous dragonfly, or not this dragonfly, this previous shooting star. It's not a shooting star, guys. I'm sorry. It's been a long week. This inverted hammer right here needs to get filled to the downside with this current candlestick. Oh man, oh man. Another beautiful morning. A little bit of patience is all it takes to get our answer. All right, looks like the candle printed with a higher low. I think this thing is going to want to push up one more time before we short. If that does happen, we can take more shorts off the off the rejection. So if price does dig into this area around 1275, wait for a closure back under 1260, and then we can retest off 12,050. So like detour above the range, break back under the range, 12,050 key level, short down. So I'm holding this. Actually, I have a pretty small position. I might just decide to leave it open and then just stack as it goes into the range. But another option is just to close as soon as it breaks above these highs, close it, and then just re-enter at the top and kind of cut the loser quick, and then re-enter the long or re-enter the shorts when we have a better opportunity. Holding a little bit of drawdown on this, so you guys can see. We'll try to get a better entry here. This is Roy, you are goated. Relax. And get hyped after the trade plays. It's playing around, it's playing around, it's playing around. So it's wedging here. Basically, it's enticing sellers on the upside to short. It's enticing buyers on the downside to continue going long. And one is about to get swiped. For some reason, I feel like the buyers are going to win this. So I think we can push up first and then drop. That's just my personal take. If anyone's not comfortable holding, through a push up, this would be an opportunity to close the trade. If you're looking to just stay in this trade and in case this thing comes back down to fill, obviously the trade's open. Yeah, I'm pretty sure this thing wants to push up one more time. Will we get a follow through? Let me check YouTube real quick. Does anybody have any questions, comments, or concerns over YouTube or in YouTube? Hi, Roy. If CPI comes out as 7.75, do you expect the market to have a similar reaction in the last months of CPI? If the CPI keeps printing higher on a month over month basis, then we're definitely going to head into a recession for sure. Retrace to 1210 before it drops. Oh, my guy, Nick. Nick, get in the Zoom call, man. What are you doing on YouTube? Love the news feeds. I feel like the news first on your IG before the news even says it. I love this. All right, guys, look like bulls want to push this thing a little bit higher. We continue to print higher lows, and we're continuing to hold at that zone. I'm still in the trade. I've accepted the risk of the trade, but I'm still looking for this bigger time frame move. This push to the upside, closure back below, and sells back down. So if this first trade did not work out, then we can look for the second opportunity, and that will be my last trade for the day. Nothing crazy, nothing crazy. Tomorrow, NFP. So everybody knows first Friday of every month, that's when we have NFP data. This is the headline number of jobs that were added to the economy, excluding any farming jobs. The reason we exclude farming is because the government subsidizes farming. So they give people money to work in those jobs. So they don't count that as part of the natural marketplace of labor. So non-farm employment change, they're expecting 275,000 new jobs to get added to the economy. If you compare that to the 400,000 that was added last month, it's a pretty slow number. This makes sense because the number of open jobs went from 11.4 or 11 million to 11.2 million. So I don't really know how this is being counted. This is the one that the Federal Reserve uses the most, is the headline unemployment rate. And then this is the NFP, the non-farm payroll change. 3.6% unemployment is honestly one of the lowest that we've seen in the past 10 years. We do have record low unemployment right now, which means a lot of people have jobs. We do have that's probably 5.5 million unemployed people in America. And we have about 11.2 million open jobs. So there's a surplus of over 6 million open jobs in the economy. Nasdaq is still rejecting, literally playing just above my entry. Come on, Nas. All we need is 60 points to the downside, and we're good. Brandon said, I think GJ will drop. So you see this like head and shoulders sort of groove that it made. It's a head and shoulders and then a groove up, then all these retests. Go look at US30 real quick on the higher time frame. Kind of give you an idea of how this looks. So there's that head and shoulders. Kind of had this push up and drop. And then now we're getting this retracement up here. So I guess, I mean, your US30 is still in the middle of forming that pattern. GJ is still forming lower lows and lower highs. So if it does want to come down for one more touch at the daily low, that's where I have my buy limits at 160. So that is still an option for GJ, but as it stands right now, it's still creating higher lows and higher lows. So let's keep an eye on GJ's bullish momentum. If it violates the higher lows, then we could see either double bottom or potentially that 160 get hit. All right. Am I back in profits? Just barely. Am I back under the break-even line? I am. Just barely. Nope, still in drawdown. So normally we would cut off the stream here around 10:30, but I think I'm going to stay on just long enough for us to get that first push down. And yeah, once we get that initial push down, we can take some partials. We can all walk away in blue, and then we can call it a day. Da, 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 da. It's the beautiful thing about trading, is it's a mindset game. If it sells now, we should be getting a drop. Relax, y'all. I ain't going nowhere. we're letting the markets do their thing, but we also have to expect that we could have been here for about an hour and a half, spending quality time with each other, picking up some knowledge, developing our patience together, and then still not get a trade or have the trade go the opposite direction. Ladies and gentlemen, things happen. That is the reality of markets. And so part of being a trader is accepting that the market doesn't owe you anything. And if today is not the day for that move to happen, if there's no volume that day, or if the zone is not ready and it's going to push up to the next zone, it is what it is. If you have any kind of contention towards that, that's where a lot of over trading tends to happen. That's where some, that's where some bad decisions start to get made. Sometimes people ask me, Roy, what do you do for a living? I say, I'm a slave to volatility. Roy, who's your boss? Roy, do you have a boss? Yes. It's called volume. All right. Volume tells me when I get paid. Yes. Everybody, if you're watching this stream, our coaches are accepting new students. Our coaches are accepting new students. So if you guys are looking to work with a coach to develop your mindset, to develop your trading plan, to just work on your strategy, get a second opinion on your technical analysis, or just talk to somebody about your trading, our coaches are more than qualified to work with all of you, whether you're a beginner, intermediate, or advanced. If you guys are interested, go to ChartAddictsFX.com. It's a shameless plug. It's about as shameless as it gets. This has helped thousands of traders around the world not only understand trading, but help understand themselves, help understand how to develop patience in this game by trading alongside some people that know what we're doing. So we do daily calls, probably 2 or 3 calls a day, live streaming, market recaps at the end of the day. So we'll cover the markets. We'll cover all the trades that we're looking at the beginning of the day. Then end of the day, we'll do a call with the entire team, about 30, 45 minutes, maybe an hour, where we run through all the trades that we took for the day and some trades we're looking for the next day. So there's calls. All those calls are recorded. Can't expect you guys to memorize all the information on the calls. So they're recorded for your benefit to be able to go back and review and be like, okay, here's where we were looking for sells. Here's where we went wrong. Here's where we went right. Here's where we made money. And you can see all the calls that we've done since 2020, 2021, 2022. You can look at the years back. Private coaching, you can just schedule, hit book now and schedule with any of our qualified coaches. There's resources and there's an extra boot camp on topics that you might need help with. We are launching a signal service. And yes, we do track all of our signals. So you guys can see January, February, March, like every month of this year, the number of signals that were sent, the average stop loss, the average take profit, the average risk and reward, the pips caught. Yeah, basically everything in between. So if you guys are interested in trading with us, all of our results are there. They speak for themselves. Don't get caught up in the hype. There's a lot of hype going around. Don't get caught up in the hype. Instead, look for qualified results and see where you guys can get the most benefit. So if that's you, ChartAddictsFX.com. See you guys here. We're back at that resistance. We're back at that resistance. Price just keeps testing, keeps testing, keeps testing. We're either going to get a clear breakthrough to the next zone, and that's where we're going to be able to take our shorts, or price is going to reject this triple top here and give us a solid opportunity. All right, ladies and gents, I do have to hop off this call in about 10 minutes. So let's see if we got to follow through here in the next 10. If not, then it is what it is. We'll just continue to monitor this later in the session, and I'll send you guys the markups so you can follow the next move of this leg. Jay says, hey, Roy, tell Nas to cooperate. It's my birthday, and I'm trying to do a withdrawal. All right, let me put the magnet indicator up. First off, everybody wish Jay happy birthday in this chat. Happy birthday, bro. But let me put out the magic, the magnet indicator for you. And let's get some market action going. All right, all jokes aside. All jokes aside, it is still making higher lows. So honestly, guys, there's a very, very good chance that we push up before we get to sell. I just want to let you guys know this. If you're not prepared for all that, if this is not the appropriate trade for you, if you would prefer to wait for that push up and then catch the retest back down for a higher probability trade, this is probably the time. This is the time where you would have to chop the, just cut the trade and then look for the re-entry later in the session. All right, I have my stop loss set at 20.35 or 12.035. Just adjust the DSL. And then we'll look for a move later in the session. Alrighty, y'all. Anybody have questions, comments, concerns before we hop off of this stream? It says Chart Addicts is great when you need to develop. I appreciate that. It says it helped me. US30 already started dropping, so just give it time. Happy birthday. More life to you, my G. People wishing you happy birthday, Jay, in the YouTube comments. Yeah, there's this like channel that U30 is playing in. We have a triple high. I see US30 dropping. I see a high here, and a high here. I know we're still making higher highs and higher lows, but this is a triple. This is a 3-drive pattern. 3-drive pattern usually leads to a drop. I'll show you guys this on Google here in a second. Let me pull up the RSI and see if we can find any hidden divergence in here.
Don't say that.
What do we see? Nah.
I'm in a buy right now.
Yeah, it looks like it's going to keep pushing. Everything is still pointing towards buys. But that 3-drive pattern is definitely there. Retested the previous highs. Already created a wick and closed above. We're retesting the previous candle. I mean, so far, so good for you.
Yeah, I'm seeing like a 31,600 as the area for US30 to continue that downtrend.
Yeah, that's where I was looking at. Previous area of consolidation, kind of make it back up to the top for a second high.
Yep.
You ask yourself, amid recession risks, with record high inflation and a Fed tightening, who the hell is buying up the stock market? Smart investors. That's true. Dollar cost averaging in a big way. All right, y'all. This is the moment of truth. If we don't break down from here after this, after the market tried to push through again and close below, if we don't break down from here, then this is where I end the stream. We'll probably come back later in the session and see if we get another move.
Yo, shout out to Chart Addicts. Tag them in your Instagram. Let's post. Let's spread some love.
My guy, Nick, appreciate you, bro. Good morning. Guys, I want to give a huge, Nick, I don't even know if you want me to put you out like this, but I want to give a huge shout out to Nick. The amount of progress this guy's made is insane. Nick is going to become a top-notch trader. And it's really just about hard work. It's really about setting a game plan for yourself, some self-reflection, figuring out what your habits are so you can improve. So I just want to give a big shout out to you, Nick. You've been making crazy progress.
Gracias, amigo.
For sure. And shout out to everybody else in here that's been working hard, that's really been trying to improve in this game. Just know it does not go unnoticed. But this is probably the end of the road for this NASDAQ trade. We're going to have to come back at the end of the session. Not the end of the session, but probably an hour after this thing pushes up, and just look for a re-entry on shorts after we get a bearish engulfing. So with that being said, that was the day, y'all. An hour and a half waiting for the trade. You're not always going to get the position you want. If anybody took partials on this, good stuff. If not, my SL just got hit. So like I said, I have one more trade at the end of the session or before the end of the session to kind of give myself an opportunity to recoup some of the losses. If it's not there, it's not there. Won't have to force it. If you're watching this on YouTube, we do this every single Thursday. And also on Mondays, I stream live to talk about fundamentals. If you guys are interested in news, crypto, or everything in between, I recommend you guys getting on Mondays, 1 p.m. Eastern time on Mondays, 1 p.m. Eastern time on Mondays. I'll see you guys. All right. Take it easy, y'all. So no longer streaming on YouTube.